We have chatted to people from Germany and Korea, and it's actually just so nice the way that COVID-19 is bringing people together from all different areas. And I know we are affected differently, and some countries are further advanced than we are, but there's so much learning opportunity that we currently have. So I really want to encourage you to think further and wider than your little amazing spot in the mid-fall. But yeah, like try and connect with other people and broaden your horizon. So yeah, thanks Tanya for having me. As she said, I'm a chartered accountant by qualification, and I think you guys have all hit the nail on the head. It's a tough time, not just for our businesses, but for our clients as well. And helping our clients and ourselves understand how to go online, like Yvonne and Rian were saying, like it's tough to understand how to use these new tools, how to use online platforms to be able to render our services. So that is definitely something that I think a lot of businesses are looking into in terms of providing support. I'm one of them. But what I'm wanting to talk about today is the financial options that we have. And maybe you can't benefit necessarily or don't need to benefit directly from these options that are available to us. But if you are aware of your clients that might benefit from this, then please point them in the direction of the funds that they can capitalize on, because it'll make a huge difference to them being able to support you and obviously their long-term sustainability. So let's jump right in. As you know, there has been a lot of communication from the government and a lot of options that they have provided to us. But because of all of these options, it actually gets really overwhelming. We don't know like which are the right ones for us, which ones do we qualify for, like where do we go for all of these things. So I'm really hoping to simplify it today so that you can see which categories are appropriate for you. So the first option, main option that I want to talk about is TERS, and TERS has received a lot of media attention, shall we say, recently. And TERS stands for Temporary Employee-Employer Relief Scheme. And it used to be for a different reason, to like assist people where they are on the way to being laid off. There's like a training scheme that they can then put in place to assist. But that TERS is now changed from a COVID-19 perspective, and we will dig into that just now. But that is all about providing support for your employees to cover payroll. Same goes for ETI. Then the SAFT loan is also specifically relating to covering payroll costs, and we'll dig into that. Then the next category is all about debt relief. So it's not about getting funding or grants, let's put it that way. It's not about getting grants, but it is about getting loan funding that will assist you to either get trade financing or assist with working capital, and there are a few other options as well. So we'll have a look at that. And then there are also certain delays in tax payments that we can capitalize on as individuals and small business owners. And I didn't put it in there, but I will also just quickly touch on what we can do as individuals to support us when we are unable to make payments that are necessary. Okay, so let's jump in. Okay, I'm going to start with our payroll costs, because that is, unfortunately, payroll is one of the biggest components of our income statement, and that is normally the first place that people look to try and cut costs. I actually just released a blog on Sunday that's all about what are your options to reduce your payroll costs without looking at retrenchment, because that's really the last port of call. We don't want to go that route. So let's rather make use of the funding opportunities that are available to us. So if we have a look at TERS, as I said, that's the Temporary Employer and Employee Relief Scheme. And there are certain very lax rules, really, at this stage about who actually qualifies. But the main components are basically you need to have been significantly impacted by the lockdown. They have removed the requirement that says that you need to be in a situation where you actually need the finances, as long as you can prove that you have been affected negatively. At the same time, you have to have either had reduced hours or a full or partial shutdown of your business. In other words, if you think about manufacturing, they might have decided, okay, cool, they're just going to keep running a single line, but the rest of their factory needs to be shut down. That is effectively a partial shutdown. But for those that are non-essential services that, for example, SAB, Okay, that would be a good example of someone that has to shut down completely. And obviously, that has significant implications for them. So, either full or partial shutdown. But what they do expect is that you are up to date with your UIF payments. There are certain additional requirements that you need to look at that causes your application to be rejected, such as um, your employees not having been registered on UIF before the 27th of March. And one of the things that I've also noticed for some of the clients that I've submitted payments for or applications for, is they have been paying UIF as part of their EMP 201. So when they make their normal pay as you earn submission to SARS. However, whoever was submitting that for them never loaded on to the UIF system, like the U-filing system, the declaration. So because of that, they can't receive the payments. There's no way that that SARS and UIF is able to check that these people are adequately registered. So you have to be on two sides. You have to show that you have made the payment, but at the same time, you have to have been registered on U-filing, and you have to have submitted declarations. That is quite a big issue that is currently being sorted out. The other problem that they are sorting out at the moment is foreigners. We have had a huge problem with passport numbers that are loaded on in the space of the ID numbers. They say the system doesn't register or doesn't recognize the passport numbers because it's a different number of digits than a normal ID number. So there's a specific process you then have to follow to resolve that issue. Okay, so that's just quickly on the issues. There are a lot of other issues as well. And if you are in a situation where you're trying to apply for TERS and you're battling, please just get in touch with me and let's see how we can help you to resolve the issues. Okay, so that's who qualifies, who gets it. Effectively, it's the employee. So the employer does not benefit at all. We have to prove as employers that we have paid out the full amount of the TERS payment that we have received. If you have less than 10 employees, you will indicate when you apply that those payments need to be made directly to the employees. So it goes straight into their bank account. But as soon as you have more than 10, then you indicate that it gets paid out to you, the employer, and they will then send you a breakdown of a lump sum payment that has been paid into your bank account. And you then have 48 hours within which to prove that that full payment that they have made to you has been transferred into the bank account of the employees. Okay, so then how much? This has been a source of much contention, and just recently they have provided an updated calculation that is used. But the bottom line is you can get anything from minimum wage, which is 3,500, depending on the industry that you are in, up to a maximum of 17,000. Okay, and it's all based on a sliding scale. Basically, it's anything between, I think, 38% and 65% of your normal pay. Now, just recently, what they have allowed employers to do is to actually be allowed to top up the payment that they're receiving from TERS. So if we look at the maximum of 17,700, maybe your employee is earning 25,000. You are then allowed to top up the 17,712 to get to the 25,000, okay, as basically your salary contribution towards the 25,000. So previously that was not allowed. They would cap it at whatever the TERS payment actually is. That can be quite complicated, but the point is you can look at what they have paid out and you can make the top up based on what you are able to. You don't have to, but as long as the employee does not receive more than their normal salary, you're able to top it up to that point. The way that you apply is relatively easy. You would go onto the online TERS portal, and I'm just going to show you quickly what that looks like, just so you can get an idea. If I can find my screen.
While you're busy looking for your
yes,
the portal, is TERS a once-off payment?
No. Well, it is and it isn't. It is currently they've allowed us to apply for the period from I think the 25th of March up until the end of April. But as you'll see here, we have not started accepting TERS applications for May 2020 yet. Effectively, what this means is if you are suffering from reduced hours or shut down, whether full or partial, you should be able to still access these TERS payments up until the point where lockdown is lifted, obviously depending on how significantly your business has been affected. So no, not necessarily once off, but up until now, it's only been for up until the end of April, and we're waiting for them to open it up for May 2020. Okay, so the UIF site is actually really easy. I'm just quickly going to log in so you can get a quick squiz. So you can get an idea of how it would work. So literally what you will go do is you will go create your account and you will then add your employer details, which is basically like a little application form that you fill in. And then from there, you need to upload the CSV file. Now, the CSV file is something that causes a lot of issues if it is not loaded correctly. So again, if you are struggling with this, please just get in touch. It's quite complicated in terms of like what sort of parameters need to be in place and headers and footers and things like that. So if your CSV file is not correct, it can cause your application to be thrown out completely. However, that being said, you are able to add one employee at a time. So if you only have 2 employees, for example, then just add them manually. It's much easier because you don't, at least the CSV file is not going to kick you out. Okay, so that is one thing to consider. Once you have submitted everything, then you will see that there's a payment breakdown report where you can see payments that have been accepted and declined. You can also go see the status and see what is happening there. Just going to log back out here. I want to also just show you if some of your friends maybe or your colleagues have employers that should have registered for TERS, but you're not sure whether or not they have, then just on the home site, you don't even have to be logged in or anything. You can go check out the list of paid employers and it will list all of the entities that have been paid out. So you can actually go search and see who has been paid out. It doesn't necessarily say how much has been paid out, but you can see, okay, they have received something or not. So that is just something useful to consider. Okay, cool. Let's go back and I'm just going to do U-shape. Okay, you will also receive, once you have actually received the payment, there's a little MOA and an acceptance letter basically that you need to sign to show that you agree to the terms basically, as well as indicating a reconciliation and sending proof of payments to show that the amount that you've received from TERS has actually been paid out to the employee. All of those instructions will be on the letters that you receive. However, as soon as there are issues, it's quite a massive mission to try and resolve those. So just get in touch with someone that's able to assist you there. Okay, so TERS, spending a lot of time there because this is the part that most people would be able to access. So this, and it is relatively easy to get there if you are able to adhere to all of the requirements. Okay, so then moving on to the next one, which is ETI. Okay, so ETI, the employment tax incentive, has originally been put in place to encourage businesses to employ youth. Okay, so what they have now done is they have extended the definition of who is allowed to receive ETI. Basically, it was up until the age of 30, you got ETI, which was 500 to 1,000 Rand per month, depending on how long they've been in your employment. But that has now been increased to 750 Rand per month, and all of your employees are now eligible, provided that they earn less than 6,500 per month. For you to be able to qualify for ETI, you have to be tax compliant. But what it does is it's not cash in your pocket. What it really does is it just reduces your overall PAYE payment. So that extra little saving that you have on your PAYE is effectively the part that you can then use to assist the payment of the salary bill that you have. Okay, so, it's available from April until July. Obviously, that'll depend on the period of lockdown. The way that we apply, literally as part of your normal PAYE calculation, there's a space where you can indicate ETI and you will then just claim the higher amount. Okay, so you can check those ones out. Not as common, more common in companies that have quite a big base of employees versus just your small business owners that probably don't pay PAYE maybe because people aren't above the threshold. Okay, then the next one is SAFT, or the South African Future Trust. And this one is effectively a loan, okay? It's not a grant. So the ETI and TERS, you don't have to pay back. SAFT, you do have to pay back. People who qualify are your SMEs who earn less than 25 million in annual revenue, which I think is quite a large portion of our population. But again, we must show that there has been distress due to COVID-19, but beforehand we have a strong track record because, again, it's a loan that has to be repaid. So they have to make sure that they're covering their bases. Okay, but you need to prove that you have been affected significantly under COVID-19. So the person that gets it is the employer because it's a loan, okay? So it's effectively, it's not paid out to the employee. Sorry, it's not paid out to the employer. You'll see it's paid directly to the employees because they need to make sure that they're closing their loop. But the employer is the person that is responsible for repaying that loan. So it's an interest-free loan that you have to repay over a 5-year period. However, they don't say when you need to start repaying that. Effectively, as long as you have it repaid by the end of the 5th year, you're fine. As I said, there's no interest, so you're not going to be penalized for holding on to that money. Now, the amount that will be paid out it's quite small, depending on how much your employees are actually earning at the moment, but it's 750 Rand per week for a period of 15 weeks. So that's like 3.5 months. Okay, so that's effectively also like April until July, with a maximum of 11,000 per permanent employee. Okay, so note that it's only for permanent employees, it's not for temporary workers. So a maximum of 11,250. If you work that out over a 5-year period, it's actually not even that much per month. So it just depends on how many people you have, about how affordable that is going to be. Okay, and the way that you apply is really just by directly applying with your bank. I will show you a quick example of what it looks like for the NetBank application, just so you can have a look. Okay. Basically, you'll just indicate your business details, your industry, but importantly, explaining a brief explanation of how COVID-19 has impacted you, your number of qualifying employees, etc. Okay, so it's actually a really simple application form. You then submit it to the bank, and they will then do the evaluation to determine whether or not you are eligible and whether they are willing to give you that money. Okay, but that's quite a nice option because, as I said, it is interest-free, and you have 5 years to repay it within. So it's really good going. Okay, then the next one is all about support for debt payment. So if you have debt or you need to get some sort of relief for cash flow purposes, this is where we would go. So just specific industry relief options, just so that you know about it. I'm not going to go into a lot of detail for it. If you do have clients that are in these industries, have them go have a look at the additional information. In terms of hospitality and tourism, as you know, they've been extremely hard hit. Okay, so they are making 200 million Rand available, provided you have less than 2.5 million of annual turnover. Unfortunately, or fortunately, I don't know, preference is given to disadvantaged businesses. So keep that in mind when you are referring your clients. The next one, sports, arts, and culture. 150 million is available for cancelled events. Okay, and you can go to the DAC website there. For agriculture, I think everyone's happy that they have been able to really go back into full force under lockdown level 4, but there is 1.2 billion available for agricultural support and relief. And then for mining and minerals, there's short-term working capital support available. All of these have different types of support, but those are the types of numbers that we are talking about. Okay, so I'm just referring to those so that you are aware. The one that I want to get into is the SMMESA fund. Maybe just before I jump into this one, you guys might have heard about the Rupert fund that was operated through business partners. However, it came and it went as quickly because the fund was almost triple subscribed. So they made 1 billion available. Within basically a weekend, we had 2.8 billion worth of applications during that time. So that is quite a significant amount of applications that were processed. I don't think everyone necessarily received it, and they've indicated that if any of the funding becomes available again, they will reopen applications. There were some quite good support for sole proprietors as well as the companies, the registered companies. Just to say that one is not currently available. But so the SMMESA fund is really meant for your small, micro, and medium-sized enterprises, but we have to be 100% owned by South Africans, so no foreigners are allowed here, and at least 70% of your employees need to be South Africans. So if you have employed a large cohort of Zimbabweans, for example, and it's impacting on your percentage of employees, then you may not be able to qualify for the SMMESA fund. You also need to be SARS registered and you have to be compliant. So that means that all your taxes need to be up to date. You basically need to be able to get a tax clearance certificate to be able to show that you are compliant. And then you also have to be UIF compliant. So you have to have been doing your declarations, you have to be up to date with your payments, all of those things. Maybe just to reflect back on the TERS quickly, because I'm talking about UIF again, we have to provide up to 3 months worth of pay slips and proof that your UIF declarations have been up to date. So keep that in mind when you're applying for anything. If you have to show that you have been compliant, bear in mind you might have to prove from January up until March at least that you have been making payments. So just in the back of your mind, remember that. Okay, so who gets it? It's the employer, and this is a soft loan which gives you prime less 5%, which is like a massive bargain, especially considering how much they've been dropping the interest rates at the moment. So yes, there are repayment terms, but I think they give you like a little bit of a debt holiday and things like that. So you don't have to repay immediately, but really the benefit is coming in through the very, very low interest rate that we've got there. Able to apply for up to 500,000 per business, and we would register using the smmesa.gov.za site. Now that site crashed at the beginning of lockdown where everyone was trying to apply, but it is back up and running again. I will show you guys quickly what that looks like, just so you can get an idea. Let's go there. Okay, so SMMESA site. Here we go. So very simple, straightforward to fill in, but you have to be registered on this site before you are able to actually apply for anything. You'll see here they talk about your employee demographics. What do you currently require, non-financial or financial assistance, and any subsectors that you're in, food products, etc. And you submit it, and then nothing happens. So the next part that you would go to after that is to actually go apply using their funding template, which you can go download on that site. And you will see you have the option then to either apply for the business growth or resilience facility, which is really put in place to assist businesses that can capitalize on the COVID-19 crisis, versus the debt relief financing for those businesses basically that have been shut down and have been negatively affected. Okay, so really simple, but what I want to show you is the type of support that you need to provide. Here we go. You'll see it's quite hectic. So all of your statutory documents, CSD, which is the Central Supply Database, FICA, IDs, bank statements, business profile, execution plan. There's a lot. Okay, so before you go down that route, make sure that you've got all of the information available. Okay. So you would then submit it to the DSBD via email, unfortunately, and then it's a wait and see. But they have been quite responsive, actually, in terms of their emails and indicating what sort of documents are still outstanding.
On the yes, so that one. If you don't have any employees, maybe you have external contractors or something like that, or you don't have any employees, you are a sole proprietor, you work totally independently, are you still able to access the fund?
I haven't really seen that this is available for sole props. It seems like you do have to be registered as a company, unfortunately. If you are registered as a company and don't have employees, you should still be able to access the funding, I believe. Yeah. I don't think that is necessarily a requirement to have a certain number of employees. However, if you are uncertain, let's engage, okay, because then we can actually go through the finer details. Okay, then, so the most common ones that I see people applying for currently is TERS and this one, SMMESA fund. Okay. Then the next one, which I thought was quite interesting, was the Giving for Hope Foundation. They have interesting requirements, such as that the business needs to be socially responsible and that you have to be Sharia compliant. Okay, it's meant for SMMEs with annual turnover of less than 20 million. Now here you will see there's a requirement in terms of minimum number of employees, at least 5 people. The employer gets a loan, which is interest and repayment free, because obviously it has to be in line with Sharia laws. Okay, so that's why it's interest-free, and you get a debt holiday for the first 12 months. Can get up to 1 million. Again, there's quite a lot of supporting documentation required, and you need to open a special bank account with Al Baraka. Okay, and you need to be able to provide security for that funding. We'll see that is the little website. I won't go and show you that one. Again, it's a lot of options that are available. You just need to choose the one that actually fits and that makes sense for your business. Okay, then the COVID-19 SME loan scheme. Now this one is operated through the banks. So if I had to go to the Nedbank site, I'm with Nedbank, so that's why I'm referring to Nedbank. You will see that there's something for SAFT, and there's also the COVID-19 loan scheme. Now this loan scheme is specifically for businesses, but excluding individuals. So sole props, you don't make it. Okay, state-owned entities and listed companies are excluded. Okay, turnover of less than 300 million per annum, but registered with SARS and in good standing. So in other words, you need to be able to show that you have your tax clearance certificate and you have been negatively impacted by COVID-19. Now, what happens here is the employer gets a loan with interest at prime with a 6-month payment holiday, but during that time, they still are capitalizing your interest. So you're not saving on that interest, so it would actually be in your benefit to start repaying that sooner. But you basically have the option to repay it over 5 years. So it's like a 66-month contract, effectively. And the amount that you can qualify for is up to 3 months worth of operating expenses. So you need to be able to provide a calculation to them to prove this is how much you are going to need. And even though they're not imposing a specific limit, obviously they're going to look at what you are able to afford as a business. So they will do affordability assessments. They'll look at your track record. They'll look at your plans going forward. All of those things will be in place. Even though the option is there to apply, it's been a little bit quiet in this front. We haven't seen too much more communication coming through from banks recently in terms of this loan scheme, but the option is there. We're just waiting for them to actually implement the processes to be able to apply for this. Okay, then if we look at getting support from your bank, so this is now maybe more in your personal capacity, but just to mention that different banks have different support options available. For example, for Nedbank, you have the option to apply for payment holidays, okay, for your debt, for example, or for any other terms that you have with them, you might be able to get a holiday from that. Then what they're also doing is they're reducing the portion of your credit card repayments that you have to make. Think about a credit card normally would have a minimum monthly repayment that is due based on a percentage. They're going to reduce that percentage so that you are able to extend the payment effectively over that period. And then withdrawing cash from ATM will be for free. Yay! We like that. And they are also going to be waiving penalty fees on withdrawal of fixed deposits. Now, if you have in your business or in your personal capacity, you have fixed deposits that's only due to expire within 6 months, for example, you can now actually give them notice and say, I need this money right away. Please release it, and they won't charge you a penalty fee. So if you have been waiting anxiously for one of your funds to become available because you actually need that capital, make use of this opportunity, okay? It's actually a really great time. You could probably even use it as an excuse to reinvest somewhere else. Wouldn't necessarily recommend that, but just keep your options open. I think I've got some money that I've invested with in a 32-day bank account, 32-day notice account in my business, and to be able to stimulate cash flow, I might actually just request them to release that so that I can spread it out better and maybe just put it into a shorter notice period. So we've got some options. Just be aware of them and go check what you have with your specific bank to be able to capitalize on. Okay, delays in tax payments. Now, this is where we get to the fun part because people get confused. And not all of these are relevant just yet. We're excited about them, but we're still waiting for it to apply to us sometimes. So I just want to run through these so that you're aware. So firstly, PAYE, if you are paying quite a big pay-as-you-earn bill, you are allowed to defer 35% of your PAYE for the periods of April up until July over a 6-month period. So in other words, you still have to pay 65%, but they'll take that 35% that you have not yet paid and they'll spread it over a 6-month period. They'll do the calculation for you and they'll say, okay, this is how much is due this month and the next month. To be able to qualify for this, you must be tax compliant, like with everything else. Obviously, they want to know that you are in good standing, but also you need to have less than 100 million of gross income for the tax years between 1 April 2020 and 2021. So basically, any years ending now from the 1st of April 2020 up until the end of April 2021, you have to earn less than 100 million in gross income. Also, maybe just to add here, if there are any penalties that you are suffering that you cannot repay, just engage with SARS. They are looking at waiving some of those penalties and interest if you show that you're unable to pay it. Then provisional tax, which might be more relevant for most of us on the call. If you're running your own business, you should be paying provisional tax. So what they are allowing us to do is if your first payment falls within the 1st of April 2020 up until the 30th of September 2020, that first payment is not going to be 50% of what you think you'll be earning for the full year. It's only 15%. So it's much lower. So you've got like a nice little saving there. Okay. In my case, because my tax year ends 28th of February, I've missed out on that. So I've already made, wait, I lie. My first tax payment will be in August. So there I will only pay 15%. Yes. Okay. A few more months to wait. And then the second payment, which in my case will then be on the 28th of February next year, will only be based on 65% of my estimated tax liability as opposed to 100%. But then I have to use my final payment that will be happening in September to make sure that that payment is being used to top up any outstanding amounts. So where that third payment would normally only be a small portion, that is actually going to be quite a significant amount because that'll be 35% of your estimated tax liability as well as whatever top up you would have normally had to make for your actual calculation. Okay, so that is really helping to free up a lot of cash flow. You think some of the bigger businesses would be sweating bullets right now trying to figure out how they're going to make their first provisional tax payment. So that is going to provide quite a significant amount of relief. And if you're able to take whatever money you're saving from your provisional tax and not just like plow it straight back into your business, but rather put that aside and try and see if you can build up some interest on that, that's going to stand you in good stead because you can actually make your money work a little bit harder for you. So that's for tax deferrals. And then we all want some personal relief, right? I hope you guys are all doing some exercise during lockdown. So just personal relief. A few things to consider. You guys would have heard about debt holidays. Now, as a chartered accountant, I would like to strongly advise you not to take a debt holiday if you are at all able. Because a debt holiday, really what it does is just says, okay, cool, you don't have to pay, but we're still charging you interest. So in other words, your debt is really just growing. You're still going to have to pay off that money. It's just going to become that much more expensive to do so. So if at all possible, please try avoid taking a debt holiday. I'll come back to the alternative on that one just now. Then insurance premiums. If you're able to negotiate with your short-term broker, and we've got one of those on the call today, to change your cover just a little bit, whether it's saying, okay, cool, I'm not driving my car at all, I'm going to remove third-party insurance, or whatever the case might be, just go see what are the options that you have in terms of negotiating reduced premiums, but bearing in mind reduced premiums go along with a reduced cover. So you might be paying less, but that's increasing your risk. So just make sure you are chatting to your broker about what is suitable there. And if you're paying rental, whether it's a flat or whether it is an office, whichever the case might be, do talk to your landlord. Currently, there's no specific rules saying that we are able to get relief from our rental payments, other than saying that we are not allowed to be evicted. But just have a chat to your landlords. They are also struggling, so bear that in mind, but maybe you are able to say, okay, cool, I'll pay 50% and I will make it up later. And some people have also said, okay, great, you paid a month or 2 months worth of deposit. I will now start applying some of that deposit that you had paid towards your monthly contributions. So have some options, but have that discussion. That's really what it's going to come down to. Then there are some social grants that are in place for caregivers, for child-headed households. Really, those social grants, they're not a lot, but there have been some increases that are available there for SASA. But what we want to really get to is to see how we can cut our costs in line with our loss of income. If you think about the first time you received a pay raise, we spend that pay raise really fast, right? And our lifestyle often just adjusts constantly according to how much we are earning. So if we were able to adjust upwards, there's no reason why we can't also adjust downwards. So look at how much you have lost in terms of your income and see what percentage of your costs you can actually go reduce based on that. And then the last one, which links back to debt holidays, is credit insurance. Now, there were some articles and some WhatsApp videos that went around almost like right at the beginning of lockdown, which was talking about credit insurance. And what that says is in your loan agreement with a bank, you might have a clause indicating that you have credit insurance, which means that if you are unable to pay your debt due to a loss of income or a loss of employment, then this clause kicks in and it will take over some of the payments. So go have a look at that, talk to your banker, because having that option and being able to use your credit insurance instead of a debt holiday is going to save you a lot of cash flow and a lot of additional interest. Okay, I think that was a lot of information, but I'm going to stop it there. As I said, if you are looking at any of these options and you want more information or you just want help, because like TERS, for example, is just like a nightmare. We sometimes just want to pull out our hair. Just, engage. It doesn't have to necessarily be me. If it's someone that you trust that's in the fold, do that. But I'm here. I'm at your disposal. Let's help you or your clients to access some of these funds. Thanks, Tanya.
Thanks so much, Christine. It was really lovely hearing from you. I had a few questions come through during your presentation, and while I'm busy talking, if anybody else has other questions, you're welcome to chat, pop them through to me on the chat and I'll post them to Christine. So the one question was, okay, we want the link to that blog you wrote on Sunday.
Okay.
Secondly, what would you charge to for your consultation? So if I'm needing some assistance, want you to help me, what would that process look like?
Yeah, I mean, I think it's easiest just to engage one-on-one. Obviously, I understand currently people are battling financially, so I'm willing to just even go on like a pay what you can basis and say, okay, cool, this is my normal rate, but let's just see what you're able to do. I will provide the little link to go check out my business coaching prices, which might just give you an idea. But as I say, I'm like happy to engage in terms of a pay what you can basis. Let's just like help one another at this stage. I think we all need that.
Great, thank you so much. And then, as I've mentioned, this session has been recorded. So what we'll do is I'll just tidy up the recording a little bit, and I'll post a shareable link on the Midval group, as well as if you would like me to send it to you individually, you're welcome to contact me, and I'll just use it from that point of view. So if there are no further questions, I'm going to stop the recording there.